The post by the former CEO for the National Petroleum Authority, Alex Mould, on Facebook sought to draw the attention of the Bank of Ghana to the unavailability of foreign currencies in the country. According to the post, banks are reporting a shortage of FX to meet payments of maturing letters of credit issued to international oil trading companies. The post further says this development is due to the Bank of Ghana's inability to meet requirements at the various FX auctions. The former NPA CEO is worried stock of fuel may be hit and subsequently lead to a shortage in fuel products. But how did we get here? A financial expert, Courage Boti, has been given reasons to that effect.
You realize from the start of the year that sentiments have been against us, and foreign inflows, portfolio investment inflows, which is a big source of supply for our foreign market or forex market, you would see that has been on the decline since September last year due to the negative sentiments. Inflation rates are very high in the advanced market, and the COVID-induced monetary support that meant interest rates were very low in most of the advanced market, and then attracted foreigners into our market to the higher rates we have here. Most of that has reversed now. Inflation is high, so monetary policy authorities are hiking interest rates in the advanced markets also. And given the risk and our fiscal vulnerabilities, naturally, people will move out of our market into those more established markets. And so what you call your sell-offs, those are a big part of why the cedi is falling as low as it has now.
The rippling effect of this situation is that BDCs will not have the capacity to import more petroleum products, and the little that will come will be sold at increased prices because of the rush for the commodity. The Executive Secretary for COPEC, Duncan Amoah, is hinting of an upward adjustment in fuel prices in the second pricing window of August. He says despite a decline in the price of crude oil on the international market, consumers of petrol and diesel will have to pay more.
The unavailability of the FX is probably going to lead to supply side disruptions, and then it's also going to lead to pump price adjustments upwards, like I've indicated. The first window, August, saw some reductions marginally. The second window, unfortunately, instead of a sustained reduction, is rather going to turn out an increase of some 5.5% due simply because of the cedi's fast depreciating and the unavailability of even the dollar for these importers to pay their suppliers off.
He further urged the Bank of Ghana to facilitate access to foreign currency and put in other measures to stabilize the plummeting cedi.
What is in all of this is that the trotro driver, the Ghanaian consumer, would have to pay more. For now, you may not have to worry too much about the mass shortage because, like I said, there's enough stock. But as to whether cargo will continue to come in the face of the unavailability of forex to pay for what has been supplied already, that could certainly set in somewhere in October, November. If the BOG has got any plans to halt the fast depreciating cedi, this is the time they need to roll out whatever plans they have, because as I speak with you, some BDCs are being forced to price at a forward FX of 11 Ghana cedi to the dollar. Some have even probably done beyond the 11.
It looks like there is no end in sight with regard to the plummeting of the Ghana cedis. This situation, stakeholders in the petroleum downstream say it might take a toll on related businesses. Reporting for Citi News, my name is Kweku Aduama Ansa.